Morning, grade 12. This is Mr. Chake. If you're watching this, you're definitely at the right place. Please don't forget to hit that subscribe button down there, and I promise you that will make your academic problems a thing of the past. With that out of the way, let's get into the lesson of the day. Now, here we are required to do balance sheet, some fixed asset items, as well as the incorrect net profit. So I'm just going to go through it and explain to you how you are supposed to answer such questions. Roman figure number one, they want you to calculate some items on the fixed assets. Roman figure number one, they want you to calculate the depreciation of this asset. And remember, our year started on the 1st of March 2018, and they're saying that it was sold in 31st of October. So it was with us for March, April, May, June, July, August, September, October. So it's 1, 2, 3, 4, 5, 6, 7, 8. So it was with us for 8 months, and they're saying that the method that they use to depreciate is 25% per annum using diminishing balance method, meaning that if you're going to calculate your depreciation on the carrying value. So according to this, the carrying value of our asset at the beginning of the year is 225,000. So it means that when we do the calculation, we're going to say 200 and we're going to say to 225,000 multiply by 25 over 100, and then multiply by 8 over 12. And then remember, it was with us from March, April, May, June, July, August, September, October. So it's 8 months. So when we do that calculation, we are going to say we're going to say 225,000 multiply by 25 divide by 100, and then multiply by 8 divide by 12. Okay, let me just do it. 225,000 multiply by 25 divide by 100, and then multiply by 8 divide by 12. It's going to give us 37,500. So our depreciation for this asset is 37,500. And the next thing, they want you to calculate Roman figure number two. They want you to calculate the carrying value. So your carrying value is going to be remember, our carrying value at the beginning of the year was 225,000. So you're going to take 225,000 and you subtract your depreciation for the year, which is 37,500, and it will give you a carrying value. So 225,000 minus 37,500 gives us 187,500. And then from there, they are saying that you need to calculate the profit on sale of asset. You'll get that information from your fixed asset note. Remember, they said it was sold for 195,000 cash. So if you say 195,000 and then you subtract the carrying value at the date of sale, it will give you the profit. So remember, it was sold at a profit. So let's check. 195,000 195,000 minus 187,500, it gives us 7.5. So you made a profit on sale of asset of 7.5 of 7,500. Now the next question, they're saying that calculate the fixed assets and carrying value. Now remember, when you were doing your cash flow, you were taught that your disposal and depreciation will decrease your fixed assets and carrying value. So let's check what they have on the trial balance. So according to the trial balance, the fixed assets that they have, they amounted to 10,190,000. So we'll take our 10,190,000, we subtract our depreciation, which is 37,500, and we also subtract the disposed ones at the carrying value, which is 187,500, and then it will give us our carrying value, our fixed assets at carrying value at the end of the year. So 10,190,000 subtract 37,500, and also subtract 187,500. It gives us 9,965,000, and then you are done with the first part. Remember, guys, you will always be given some fixed assets to work out on your when you do your balance sheet. Okay, so please make sure that you familiarize yourself with that. And then from there, they want us to complete the incorrect net profit. They gave us the incorrect net profit before tax. So I suggest that when you are doing balance sheet, always make sure that you start by entering the balance sheet items. Okay, so when we check here, our balance sheet items that we're given here, we can see that we have some things that are going to be entered in the balance sheet. So let's see. So our ordinary share capital is given to us. So it means that in the answer book, remember, maybe we can start by the formula of the retained income. So for your retained income, you are going to have balance at the beginning of the year. You are going to have net profit, your net profit after tax, and then you're also going to have your repurchase of shares, and then you're going to have your dividends paid and declared. Okay, and then in your balance sheet you are going to have your, okay, they've entered some items for you, but you already know the item for the fixed assets, the amount for the fixed assets. You'll just wait for the adjustments. Now under current assets, they've entered inventory for you, so you know that you're going to have trade and other receivables. Okay, and then after that they gave you ordinary shareholders, your ordinary shareholders equity. You know that here we are supposed to have your retained income. Remember, you are busy with the note. And then after this, they gave you non-current liabilities. You know that under our non-current liabilities, we will have our loan, and then under our current liabilities would have trade and other payables. Okay, and then we'll also have shareholders for dividends. So we'll have shareholders for dividends. Okay, and then from there you can skip this piece because you don't know whether SARS, you'll have SARS as a liability or bank overdraft. But and then after you are done with this, you make sure that you always go back to your information. They will give you an idea. So here they're saying on the information, they will tell us as we do our adjustments. There's a part that I want where they said um okay, so what you need to remember is that some of these items you need to enter them on the incorrect net profit. I just forgot where I saw that, but there's somewhere where they made us to note. Okay, I will see when I get it, but there's somewhere where they told us that some of those transactions will apply to the balance sheet. I forgot where I saw it. Okay, so because remember, there's an this question is you have to use it to do the incorrect net profit, to do the balance sheet, and also that note. So let's start here. Our mortgage loan at the beginning of the year is 1,758,000. Okay, we'll come back to that. Our ordinary share capital 8,152,000 has already been entered for us. The retained income, that balance has already been recorded for us, if you remember. So they recorded it. We go to the next one. You have your mortgage loan 1,758,000. I suggest that you wait if you check if there are no adjustments, but I saw that there are no adjustments. So this 1,758,000, we can enter it in our balance sheet for now. Okay, so 1,758,000, and then from there you go to the adjustment. The adjustment says that we have the fixed deposit. It's a balancing figure, so meaning that you need to work your way up. And then trading stock 1,102,000 has not yet been recorded for us. Okay, they did, so we just tick it. And then next we have net trade debtors for 10 million, 1,090,000. So remember, net trade debtors is part of your trade and other receivables. So we'll say 1,090,000 here. And then we check what else are we given. we have the bank. They are saying that bank is favorable, so meaning that it will be your balancing figure. SARS provisional payments are given as 155,000. We'll go back to it after that. Creditors control 1,906,800. So it's part of payables, so it will come here. 1,906,800. Okay, and then after that we can go to our adjustments. Now they're saying that the net profit before tax of 822,700 was calculated before correcting the following. In other words, this information was not adjusted. Transaction number one, they are saying that provision for bad debts must be increased by 65,000. So remember the 65,000, because we're doing incorrect net profit. If it increases, it becomes an expense. So therefore, this will reduce our net profit. But remember that in terms of the balance sheet, this will not be it will not affect the balance sheet, because they've already given the net trade debtors, and net trade debtors is given after deducting provision for bad debts. So it means that that figure has already been updated there. So in our incorrect net profit, we are going to subtract this because this is an expense. So we're going to say provision for bad debts adjustment is going to come here. So it will be provision for bad debts adjustment. So that 65,000, it is an expense, so it will reduce our net profit. Let's read it again. Remember, they said provision for bad debts must be increased, so our expenses will naturally decrease our net profit if they were not recorded. Okay, next, 9.8 of an advertising contract applies to the next financial year. Remember, advertising to us, it is an expense. So if it is for next year, it means when we were doing that income statement for advertising, we deducted more. So we are going to add back that 9.8. So in other words, this will be a prepaid expense. A prepaid expense will increase your net profit by that particular amount that was prepaid. And then also, because it is a prepaid expense, we need to go and edit in our trade and other receivables in the balance sheet. So in the trade and other receivables, we are going to say plus 9.8 because you paid ahead. And then the next item says that a tenant paid rent for 334,000 for the period 1 March 2018 to 31 March 2019. So we can see that this person was with us for they were with us for about 13 months, and then they are saying that the rent was increased by 3,000 per month from 1 January. So the increase affected January, February, March. So if they increased, what do? You take out that increase so that we can know how much they were paying before the increase. So we're going to say 334,000, and then 3,000 multiplied by 3 is 9,000. So you minus that 9,000, and then you divide by 13, it will give the amount before. So let's check. So remember, we need to show this in our workings also. So we're going to say for rent, let me check, for rent income. Yes, it's rent income, remember. It's rent income because we have a tenant. So we are going to say 334,000 minus 9,000, and then we divide this by 13, and then you plus the 3,000, because remember they said the rent was increased. So let's check if we do it like that. So if you say 334,000, you subtract 9,000, it gives you 325,000, and you divide it by 13, it's going to give you 25,000, and then 25,000 plus 3,000 is going to give you 28,000. So remember, this rent was received in advance, so we must reduce our net profit by 28,000. Income received in advance is a liability, remember. Okay, so remember they said this income was received in advance. We got it for, we got the income for March already. So it means we must also go to our trade and other payables and say plus 28,000. So I'm going to come here and say plus 28,000, and then from there you can go to the next transaction. They are saying that depreciation and profit and loss on the vehicle sold must be recorded. So remember, our depreciation was 37,500 if I remember well when we're doing the calculation. Okay, so our depreciation was 37,500. So we are going to record that depreciation. Remember, depreciation will reduce your net profit. So we'd have depreciation as 37,500, and then we'll also have profit on sale of asset. Okay, and then it will be plus 7.5 because they sold it at a profit of 7.5. And then the other thing that you need to remember is the next transaction. They are saying that a further 43,000 is owed for income tax. So in other words, we are owing an extra 43,000. Before you forget, make sure that you take this to your balance sheet. Remember, they said you are owing 43,000, so it will be SARS income tax, and then you write that 43,000 because they are saying you are still owing. And then after this, you go and check how much have you paid for your income tax, how much have you already paid. Your information shows that for provisional tax payments you paid 155,000. So you need to go and correct your incorrect net profit. So you'll have your income tax here. So on our income tax, we're going to say 155,000. Let me check if it's 155. Yes, 155,000. And then you're going to say plus 43,000 because they are saying you are still owing, and that amount is going to be deducted. Okay, so let's see. 155,000 plus 43,000, it is giving us 198,000. So you need to make sure that you get your correct net profit after tax. So whatever that is in brackets, we're going to minus. Whatever that is positive, we're going to add. So we're going to say 822,700 minus 65,000 plus 9.8, and then we subtract 28,000, and then we also subtract 37,500, and then we plus 7.5, and then we minus 198,000. Then it's going to give us 511,500. Now this 511,500 is supposed to go to our retained income note, so we have that 511,500 here. Okay, and then after this you move to the information about the repurchase of shares. Let's hear what they're saying. So here they're saying on 1 March 200,000 shares were in issue. The total value was 7,600,000. So meaning that your ordinary share capital at the beginning was 7,600,000. They are saying that 360 shares were repurchased at 4 Rand 10 cents. So you do your triangle. That triangle is very important. So for your cash flow, they said it's 4 Rand 10 cents. So for your ordinary share capital, the average will be, you take your 7,600,000. Remember, the repurchase took place first, so it means you need to get average price. You use your opening balance of ordinary share capital, you divide it by the number of shares. So if you say 7,600,000, and then you divide it by issued shares, which is 2 million, is going to give you 3 Rand 80. So our ordinary share capital value here is 3 Rand 80. So you get the difference. Remember, cash flow uses the difference. So if you say 4 Rand 10 minus 3 Rand 80 is giving you 30 cents. 0.30 will go to our retained income. So on the repurchase, we are going to use this 30 cents. So we're going to say 360,000 under the repurchase. We're going to say 360,000 multiplied by 0.30. then you put it in bracket because you said you are dealing with a repurchase. So 360,000 multiplied by 0.30 is going to give you 108,000. Okay, and then you move with the next transaction. The next transaction says that interim dividends were paid in September for 295,200. So you immediately put that in your page, 295,200. Remember, this should be in brackets, and then you go and look for your declared. Next thing, they're saying that on 1 October, 800,000 new shares were issued. Okay, this won't help us now. Let's get what also they're saying. They're saying that on 28 February 2019, 2,440,000 shares were bought back. So check when does the new shares were issued in October. So obviously they will also qualify for the final dividend. Okay, so let's check what they gave us here. They are saying that a final dividend of 20 cents per share was declared on 28 February 2019. So what you are going to do, you are going to take that 2,440,000 2,440,000, you multiply it by 20 cents, then it will give you the value of those shares. So let's see, 2,440,000, you multiply it by 20 cents is giving us 488,000. So remember, the number of shares that we had at the end is 2,440,000, and they said you paid 20 cents per share. Okay, and then so we have already dealt with that. I hope this makes sense. So we'd have 488,000. From there, what you can do, you can work out our retained income and close it off. So our retained, our paid was 295,200. You'll say plus 488,000 is going to give you 783,200. So we're getting 783,200. Then you get your retained at the end of this. So we're going to say 865,300 plus 511,500, and you subtract 108,000, and then you also subtract 783,200. It's going to give you 485,600. So this 485,600, you take it here on your ordinary your retained income. So that 485,600 will come here. Then you get the total because they also want you to get it. So 8,152,000 plus 485,600. Let me see, 8,152,000 plus 485,600. It is giving us, okay, let me check it, 8,152,000 plus 485,600. It is giving us 8,637,600. So you are done with this part. Next, you move to the next transaction. Next transaction says that a creditor with a debit balance of 7,600 must be transferred to his account in the debtors ledger. Remember, you can do this like this. Okay, this is your debtors ledger. This is your creditors ledger. So remember, your creditors ledger increases on the credit, it is decreased on the debit side. This one increases on the debit and it is reduced on the credit. So let's check. This person that they're talking about is a creditor. They said he has a debit balance of 7.6. So at this moment, that 7.6 is on the debit side and it's a minus. Okay, so where does this when we take him out, we must firstly take him out of the creditors ledger. So it means you are going to take him out on the opposite side because he has a debit balance. So it means you are going to come on the credit side and say 7.6. So if you check the sign, it's a plus. And then also when you take him to here, it's a plus. So you are going to plus on both your receivables and payables. Okay, remember, if it's a debit balance on creditors, it's a minus. So it means you'll say plus you are crediting, and when you go there you have to debit, you are also adding. So it's plus both sides, so it will be plus 7.6 under receivables, plus 7.6 under receivables, and also plus 7.6 under payables. Then you are done with this. Let's go to the next one. Next one, they are saying that a check for 75,000 dated 30 April was issued to a supplier in February. So remember, this is a post dated check. This is a post dated check. Remember, at the present moment, that person, yes, I issued a check, but they have not yet cashed out. So at the end of the year, I have to reverse that transaction because the money will only leave our account on this date. Okay, so for now, my creditors is going to remain as if I did not pay them. So we are going to add this back to our creditors control, and we are also supposed to add it back to our cash and cash equivalents. Unfortunately, it is a balancing figure. So we are going to go to our payables and say plus 75,000. And also, please note that we are no longer using checks, so you won't get a transaction that is a check. Next, they are saying that after processing all adjustments, the current ratio is 0.8 is to 1, and then your total current liabilities is 2,900,000. This one is not a problem. You know that the ratio says your current assets is equals to is equivalent to current liabilities. You plug in what you have. They gave you current liabilities, which is 2,900,000, and then your current assets is your X. You don't have it. Okay, so your current assets at the present moment is an X. You don't have it. So when you are given this, you don't have to struggle. You are given the ratio as 0.8 is to 1. So it means you are going to cross multiply. So to get your current assets, you are going to say 2,900,000 multiply by 0.8. So we are exactly going to do that. So current assets is going to be 2,900,000 multiplied by 0.8 is going to give you your current assets. So let's check how much we are going to get. So if you say 2,900,000 multiplied by 0.8 is going to give you 2,320,000. Okay, and then from there, so you have your current assets. You can close in your trade and other receivables. So trade and other receivables, if you say 1,090,000 plus 9.8, and then also plus 7.6 is going to give you 1,107,400. So if you take this total 2,320,000 and you subtract the sum of these two, let's see how much we'll get. This plus 1,102,000, it will give us 2,209,400. Let me just confirm. So 1,102,000 plus 1,107,400. The answer that we're getting is 2,209,400. So let's get the difference. If we say 2,320,000 minus 2,209,400 is giving us 110,600. So our cash and cash equivalent is 110,600. So you are done with your current assets. And also remember, when you were doing this, your fixed assets and carrying value, you got them as 9,965,000. So you must transfer that also under your fixed assets. So 9,965,000. Okay, so let's check the next thing that we have to do. Now next, on the information, they are going to give you something. They give you they told you that the current portion of the loan is the balancing figure, right? But we need to check, what do we have? Okay, so let's check what are we given here. So now if you look at this, you have your current liabilities, and then I will check what else do you have. Okay, so we have the equity, and then we don't have let's go back to our information. So next, remember they told us that current liabilities is 2,900,000, and then they also told us that the current portion of the loan is the balancing figure. So our current assets, let's check if we have them here. So retaining income, we have it, and then so we do have our current assets. We don't have our fixed deposit. Let's check if they said something. Our shareholders equity is fine, loan is fine. Okay, so what we need to do here, remember we need to check shareholders for dividends. We also have it, so I'm just going to transfer it. Remember it was, I think, 488,000, so I'll just transfer it here. Our shareholders for dividends, 488,000, and then let's check what is the total of our trade and other payables. So let's see. When you say 1,906,000, 1,906,000, okay, 1,906,800 plus 28,000, and then you also say plus 7.6, 7.6 plus 75,000 is going to give you 2,017,400. Okay, so let's confirm. So if we say 1,906,000, 1,906,800 plus 28,000, and then you also say plus 7.6, and then plus 75,000 is going to give you 2,017,400. So we have everything here. So it means if we take this total and subtract everything, we'll get our current portion on loan. So 2,900,000 subtract 2017,400. Okay, let me see. 2,900,000 minus 2017,400 subtract 488,000, and also subtract 43,000. It's giving me 351,600. So we'll have 351,600 as our current portion on loan. So let's confirm it again. If you say 2,900,000, then you subtract 2017,400, then you also subtract 488,000, and then you also subtract 43,000. It's going to give you 351,600. So our current portion on loan is 351,600. Okay, so let's see. If we say 1,758,000 minus 351,600 is going to give us 1,406,400. So you'd have your 1,406,400. So now if you check, we have the total equity and liability, so we can just edit. So if we say 8,637,600 plus 1,406,400, and then also plus 2,900,000 is going to give us 12,944,000. Okay, so I'm going to confirm. So let's confirm again. So if you say 8,637,600, you say plus 1,406,000 400, and you also say plus 2.2,900,000 is giving you 12,944,000. So you'll have your 12,944,000 here. Okay, now if I take my 12,944,000 and I minus my 2,320,000, it will give me the total of my non-current liabilities, which is 10,624,000, right? So it will be 10,624,000. So let's see, 10,624,000. You subtract 9,965,000, you'll get 659,000. So it means that the value of your fixed deposit is 659,000. I hope this guys made sense for you. If you want me to become your online tutor, you're more than welcome to get in touch with me by using the details that are available in the description of this video. Remember that our lessons start from just 500. Thank you so much for watching. May God bless you. Shalom.